so concerning for the markets last week when we saw ISM services come in worse than expected. And I'm wondering, when we typically see that, at what point do you start getting concerned that that will spill over to the consumer? Because those were the dots that people were connecting.
Right. The key component, the key performance indicator that has the highest correlation with consumer spending is the unemployment. And that did hit a 50-year low. So until we start seeing that number to deteriorate, I think that's when we will be more concerned about consumer spending. Right now, when you look at the government retail sales, you look at our Refinitiv same-store sales data, it all points to a slowdown compared to 2018, but it's still expected to be healthy for the third quarter. It's expected to see a 2.6 growth. This is below the 4.2 growth that we saw last year. And the only alarming thing here is that retailers are becoming less positive than they were a year ago. So to date, we've received 39 negative pre-announcements and only 15 positive. And this is less positive than we saw this same time last year. And this is mainly because retailers are very much concerned about the tariffs. They've mentioned it over 300 times in their earnings calls this year alone. And that's just the beginning.
At the same time, I mean, while we got 39 pre-announcements from retailers, we have had some pretty stellar earnings reports as well. So where do you stand on how the tariffs are really impacting? Because you have people, the companies that can execute really well, like a Nike, and they're still doing well. And they show that with their earnings report.
Well, Jharonne's right. We're seeing a really tough time to play in retail. On the other hand, we've got a fabulous consumer. So we haven't seen any issues with the consumer. The consumer is very healthy. The consumer's spending. The consumer is probably going to be up, I think, 4% for Christmas, which would be a damned healthy number. But we're seeing a struggle as far as making money in retail because there's way too many people doing it and brick and mortar struggling.
You have a rule about whether there's a recession is coming or not. Tell the audience the rule, because I think it's a actually fabulous way to think about it.
Well, the one you're probably talking about is I say all the time, we survey the customer and we say, do you have a job? And if they say yes, will you keep your job? And if you lost your job, could you get one that paid just as much? And if more people answer all three of those positively, the world's great. And if they answer it negatively, your sales slow down. It doesn't have to be a recession. It can just be a slowdown. Right now, I would suggest that that number, if I did that survey, would be the best it has ever been.
Well, you haven't done the survey? So we're back to your opinion, is that it would be good?
Yeah, it's my opinion it would be good. I haven't done the survey again.
Okay.
But we
Then
did
we
the
don't
survey
really
all the time, and we knew what the results looked like. And if you went out right now and asked your friends that question, what would the answer be?
Okay, so but here's the question. It's funny. That, under those metrics, I think he's right. And yet you looked at J.P. Morgan over the weekend, come out with that report. I don't know if you saw it, where it's suggesting that the Fed's got to drop rates because a recession is coming. So how do you square both of those issues?
Well, eventually there will be a recession. We haven't repealed the business cycle. But right now, the consumer's very healthy, and the consumer's 70% of the economy.
I mean, we've got to let unemployment go to 3.8 before we start worrying about a recession. Wouldn't we see
You can't have a recession at 3.5% unemployment.
That's my point. Wouldn't we see some signs of weakness there?
Well, but that's why you're having conversations about repo and these other issues.
Right. The thing is that the unemployment's a lagging indicator, really, kind of, or at best coincidence.
The consumer's spending like crazy, and they've got an 8% savings rate. When have we ever seen that? Never. They've got plenty of dry powder. Normally, at an 8% savings rate, you'd go, oh, my God, the consumer shut down. We're never going to have any sales.
A lot of people are counting on not you, but a lot of people are counting on a recession before November of 2020. I think there are.
They're rooting for it.
There are a lot of cheerleaders rooting for a recession before 2020.
Not true. Not true.
There are a lot of cheerleaders rooting for a recession before 2020. Not you, maybe, but there are a lot of people.
Oh, you think for political?
I'm not saying you.
Okay. Democratic Party is what you're
I'm saying. No, just some people. I don't know what party they're in, but some people somewhere. Don't you agree, Dan, that there are?
Well, I hear plenty of it. So
that's what I mean.
Saying that seems like that's what's happening.
I have ears.
What do you?
And they were big when I was a kid. People thought I looked like a taxi coming at them with the doors.
So
but neither Jharonne or I think there's going to be a recession based on the consumer.
That is correct.
If there's a recession, it's going to be driven by something besides the consumer, because the consumer is really healthy.
The consumer, though, is not immune from seeing stock market volatility and seeing the headlines about fears of a recession. So even though they have an 8% savings rate, I mean, you can make the same argument for companies and the cash on their balance sheet. They have lots of cash on the balance sheet, but CapEx is only going to rise 3% in the third quarter, which is the lowest since what, January 2017. So couldn't the consumer still pull back even though unemployment is still low and things seem to be okay right now?
I think it's more of a retail competition within themselves. So what's happening is that the consumer is rewarding those retailers. They're offering them a very convenient and effective way of shopping. And those are the retailers that are investing in omni-channel. The retailers are doing a really good job in luring the shoppers in and through all their channels, be it app, in-store, internet, and they are using that data to really study the consumer and manage them. And it's paying off. It's paying off at Target, it's paying off at Walmart. Target especially doing a really good job and not only investing in really winning over the millennials, which we're seeing other retailers do, but really winning over all of the generations. And that's why they're doing so well.
Yes, online's winning, off-price is winning, discounts winning, off-mall is winning, rental is winning, resale is winning, full price on mall is failing. And that's those 26
We've seen
bankruptcies
that in
we
the
see.
performance of the stock. So you have a Walmart, you have a Costco, you have a Target that's done extremely well. And at some point, do you say they've been rewarded enough and their valuations are full?
It's hard to imagine a recession's coming when the business is great at Walmart and Target, which is the world. And trust me, the average consumer is not watching this show, and the average consumer is not reading the Wall Street Journal. The average consumer is going around going, I've got a job, things are great, I'm taking more pay home than I ever have, 3% growth with non-supervisory personnel on wages. What else can you ask for the consumer?
I agree. The one
I want the average worker to be watching this show, but go ahead.
But I agree with him. The one economic indicator that consumers are paying attention is the unemployment number. So they might not be watching the show or the Wall Street Journal, but that's the one key economic indicator that will determine if they're going to put their hands in their pockets and hold back on spending.